Hi everyone, lesson 6.1, investigating personal loans. So I hope by now you completed the warm-up questions, and if not, you can pause the video and you can reference the answers key. Okay, so starting the lesson, let's go to question number 1. Brainstorm different places from which people can borrow money. So different institutions, we came up with a few, and you can probably Google and find more. Mention a few that exist, which are banks, credit cards, right? So we're looking for sources of companies from which you can borrow money and take a loan. Okay. Other options we came up with were financing companies, credit unions, as well as public agencies. Okay. Now, some places charge more to borrow money than others. In your opinion, which of the places in the list above 1A is the most expensive to borrow from? Rank the places in your list from least to most expensive to borrow from. Okay, so based on our research, what we found is that the least expensive to borrow from are public agencies, then financing companies, then charging more are banks, more than banks, credit unions, and most expensive to borrow from are credit cards. That's why we put them last. Okay. Moving on to the next page. Research savings accounts and 3 types of personal loans from 2 different financial institutions. Collect the following information from each institution and complete the charts below. Okay, so we came up, there are many, and many banks and other institutions. We came up with TD Bank. So we'll fill the information first for TD Bank, which is one of the biggest bank in Canada, together with Royal Bank of Canada. These 2 are the biggest banks in Canada. And name one savings account or one type of a savings account is TFSA, tax-free savings account. That's one type where the minimum amount to save needed is $1. The annual interest rate paid on your money is 0.05%. And other important features that we found were the $5 fee to transfer money out of the account. Okay. $5 transfer. Okay. Next, we were looking for different types of loans and their conditions. So let's start with the personal loan. And again, reminding we're talking about TD Bank. Personal loan, as well as car loan and line of credit, and a minimum amount to borrow of only $1. Annual interest rates that the banks charge were 2.45% for each of the three types of loans. And other important features that we found were that for a personal loan, you can borrow up to 50K, up to $50,000. And with regards to car loan, it's important to know that the newer the car, the higher the principal. Meaning the newer the car, the more expensive the car is, right? And as a result, your monthly payments will also be higher. Newer the car, the higher the principal. And with regards to line of credit, oops, back to line of credit. Also borrow up to 50K. Just like the first type, the personal loan, here too, you can borrow up to $50,000. Moving on, the other financial institution that we found is Scotiabank. Scotiabank is another one of the top 5 banks in Canada. And there is an account called Savings Acceleration Account. Savings Acceleration Account. Minimum amount to save $1. Interest also 0.05%, same as TD Bank, you can see above. Now you can see it above. And it's available only in a tax-free savings account. Okay. Available only in tax-free savings account. The other types also had a minimum of only $1. Interest rates from Scotiabank are 2.99, and these are annual interest rates for each of the loan types. First one, you can take 5 years to pay. Line of credit, there are some fees, $21 if you go over the limit. Over limit fee, $48 for dishonored payments. And the vehicle car loan, car must be 7 years old or younger. Car 7 years or younger. Okay. Now, an important question is question number 3. How do the interest rates that the financial institutions in number 2 charge compare to the interest rates that they pay on saving accounts? Circle your answer. So the amount they charge is actually much higher. Let's try to correct that. the amount they charge is much higher, as we can see. They charge 2.99, almost 3% for loans, but they only pay you 0.05%, excuse me, for saving money per year. 0.05 is much less than 3%. Okay. Moving on to next page. Brett borrows $3,000 from the bank to buy his first car. He is told that his monthly payment will be $95.4 for 3 years. Calculate the total amount that Brett will repay the bank. Okay, so we know in 3 years how many months we have. 36. Let's calculate that. So 95.4 per month times 12 months per year times 3 years. You can use a calculator for that. The total amount is 3,434.40 and 40 cents. 3,434. How much interest will he pay over the life of the loan? So to do that, we want to take a look at the difference between the total amount he paid or will pay, the total amount that he will pay, which we just calculated in 4a above, 3,434.4, and subtract from that the original amount he borrowed, $3,000. This gives us the interest, the total interest that he will pay, which is 434.4, as we can see. Brett is 17 years old. The bank requires a co-signer, which is someone else to sign the loan papers. Do you think the bank will accept Brett's 15-year-old brother as a co-signer? Explain. So no, this is not acceptable. And the reason is, it must be someone of a legal age, 18 years old or more, who has an income. So no, must be someone of legal age. What responsibility does a co-signer take? They take responsibility for paying back the loan if the client is unable to do that. So, as we mentioned, the co-signer is responsible for paying back the loan. That's very important for the co-signer to know, right? If the client or the borrower, right? The client, who is the borrower, is unable to. Okay. Moving on to question number 5. Here we're asked to fill in the table with the different amounts and interests and number of payments paid, right? So we're giving a few of the amounts, but some are still missing. Let's start with A. Complete the table. We know the amount borrowed, we know the monthly, and the number of payments. So the total amount repaid is simply the number of payments, 36 months, times the monthly payment. Every month, the borrower pays 63.13 in this case, times 36. You can use your calculator, and hopefully what you got is $2,272.68. Now the total interest paid is 272.68. How did we do that? To calculate the total interest, we subtracted the total amount. We took the total amount and subtracted the amount borrowed from that. 2,272.68 minus 2,000 gives us 272.68. Moving on to B, very similar calculation, right? Monthly payment times number of payments, $7,847.52. And the difference between the total amount paid and the amount borrowed is the interest paid. In this case, 1,347.52. Looking at 5C, here we're asked to calculate the number of payments. So the total amount paid divided by the monthly payment gives us 48, which is the total number of payments. 48 months or 4 years, right? And the difference between the total amount paid and the initial amount borrowed, in this case, it's 829.28. Moving on to D. Here, we know the number of payments, but not the monthly payment. So the total amount paid divided by the number of payments has to give us the monthly payment, which in this case is 158.04, and total interest paid is 1,982.40. So one example to clarify how we calculated C, for example. Here, we took 4,829.28 was given to us, right? And we divided that by the monthly payment. This gave us 48. Question number 6. Nayara borrows 4,500 from her parents to buy her first car. They say she can pay them 150 per month until the debt is paid. How many months will it take for Nayara to repay the loan? So here we can take the amount borrowed, 4,500, and divide that by 150 per month. 150 per month gives us a total of 30 months or 30 payments of 150 to pay back 4,500. How much will she have paid? How much will she have repaid her parents? So we know she will pay 150 per month times 30 months, and we're getting the initial borrowed amount, 4,500. How much interest will she pay? Zero in this case, because her parents only expected to see her pay the initial borrowed amount. You can see that the total payments are the same as the amount she borrowed, meaning there is no interest. If Nayara borrows the money today, on what date will she be debt free? So we know that she'll be debt free in 30 months, which is 2.5 years. Right? 30 divided by 12 months per year is 2.5. So Nayara will be debt free if today is March 22nd, 2021. 2.5 years from now is November 22nd, 2023. Last page, question number 7. Look up loans in your local business phone book or service directory. Research and compare rates and conditions for the following service from 2 companies. So based on these services we're asked about, we chose to investigate or get more information from Alpine Credits and Easy Financial. There are many institutions you can find, and these are just 2. So personal loan, the annual interest rate was 5.7%. Payday loan, for this type of service, the annual interest rate was much higher, 26.9, and lastly, 23.22 for check cashing. In the first case, the amount must be paid in full in 2 years. Must pay back in 2 years. Second case, pay back. Borrower must pay the amount back in 5 years. And then for check cashing, in 4 years. regarding data from Easy Financial. For the same service, we found different interest rates. $4.75, 21.75, and 20.99 for check cashing. Here you have to pay back in 6 months. Must pay back the paid-in loan in 2 years. And same here. Must be paid back in 2 years. Okay. Moving on to question number 8. Determine how much money you would receive if you cash a paycheck for $800 at a company you research in 7A. Let's look back at 7A. Alpine Credits. And we're being asked about a check cashing, right? If you cash a paycheck. So let's calculate that. We know that they charge 23.22%, very high interest rate. That's also their fee. So the decimal form of 23.22% is 0.2322, which if you use a calculator, you'll get 185.76. So you would receive, because they charge that in advance, you receive 800 minus that amount. It's all in dollars. 614.24. And how much money will you need to pay as a service charge? 185.76. Okay. Please also complete the check your understanding questions, and you can reference our answers. Please let us know if you have any question.